Assalamualaikum and hello everyone. My name is Aisha and today I will be walking you through the core concept of ESG and SRI and how they shape modern investment. To begin, ESG stands for Environmental, Social and Governance. It represents the specific metrics we use to measure a company's sustainability. On the other hand, SRI or Sustainable and Responsible Investment is the actual practice of choosing investment based on these ESG criteria to ensure our money aligns with ethical values. Let's break down the three pillars of ESG. First, the environmental pillar looks at a company's footprint such as carbon emissions and energy efficiency. Second, the social pillar focuses on people, evaluating workplace diversity, fair labor standards and supply chain ethics. Finally, governance deal with internal management, examining board composition and executive compensation transparency. When we look at global trends from 2016 and 2020, ESG integration has grown exponentially, showing a 24.9% increase as investors pivot toward sustainable practices. A fantastic local example of this is Sukuk. According to Capital Market Malaysia, our country is a regional leader, commanding a massive 24% share of all SRI Sukuk insurance under the Asian standards. This proves that sustainable finance is no longer just a trend, it's a critical financial driver. To dive deeper, let's look at how sustainable investing applies directly to fixed income through Sukuk. Specifically, we can compare a general standard Sukuk with an ESG-aligned alternative, Green Sukuk and SRI Sukuk. By definitions, SRI Sukuk are Sharia-compliant instruments where the proceeds are exclusively locked into project meeting environmental or social criteria. Green Sukuk represent a key subset of this, combining Islamic financial ethics with explicit climate positive goals. If we look at the key difference, both instruments are strictly Sharia compliant and completely free from riba. However, while a general Sukuk is utilized for everyday corporate financing, Green Sukuk proceeds are strictly ring-fenced for sustainable projects like renewable energy infrastructure or certified green buildings. This difference changes the investor pool. General Sukuk attracts standard Islamic and conventional investor, whereas Green Sukuk successfully captures the rapidly growing market of ESG-focused institutional investors. To answer a common question regarding principle, both follow the same ethical baseline of avoiding gambling, speculation and high uncertainty. However, Green Sukuk goes a step further by actively binding itself to strict guidelines such as the Securities Commission SRI Sukuk framework or the Climate Bond Initiative. This requires rigorous third-party certification, ensuring absolute transparency and accountability in its environmental impact. Before I pass this to the next person, let's look at where Malaysia stands in the region. This data comes from a joint study by the Sustainable Investment Platform Steering Committee, collaborating with EY and Capital Market Malaysia. It shows total SRI bonds and Sukuk issued in Southeast Asia. Looking at the chart, countries like Singapore and Indonesia have high total numbers, but they mostly issued standard green bonds. Malaysia's big strength is our $4.5 billion market value, which makes us the regional leader in sustainable Sukuk. What does this mean for us? It proves that Malaysia isn't just following the global ESG trend, but we are actually leading the way in combining Islamic finance with sustainability.
How do Islamic finance principles directly connect with modern sustainability? First, let's look at the foundation of philosophy Maqasid al-Shari'ah, which represents the core objective of Islamic law. Unlike conventional finance system driven primarily by personal profit maximization, Islamic finance prioritizes overall human growth, equity and social welfare. It serves to protect public health, preserve human dignity and alleviate economic hardship. Because of this ethical mandate, Islamic finance naturally aligns with the United Nations Sustainable Development Goals, subsequently mirroring the global fight to eradicate poverty and reduce inequalities. But how does it enforce the ethical mandate? It does so through strict prohibition. By banning riba or interest, the system eliminates predatory lending and protects weaker contextual party from exploitation. Furthermore, by prohibiting ghairah, which is excessive uncertainty, and massive, which is gambling or speculation, Islamic finance demands absolute transparency and fairness in business transactions. This acts as an organic negative screening mechanism, ensuring that capital is never used to fund industries that cause environmental or social harm. This brings us to the third pillar, the link to the real economy. Under Sharia principles, money has no intrinsic value on its own. It is simply a medium of exchange. Therefore, transactions cannot be purely financial games. They must be backed by tangible and physical assets. This asset-backed requirement prevents the creation of excessive, unsecured debt and dangerous financial bubbles. Instead, safely channel investment directly into the real-world development project, such as building eco-friendly public buildings and sustainable transport network. Finally, it is sustainable instrument in action. Social sustainability is achieved through zakat and wakaf, which are mandatory giving and permanent charitable endowments that continuously redistribute wealth and fund public welfare infrastructure. Equity-based contracts like mudarabah and musyarakah rely on risk and reward sharing, encouraging equitable business partnership rather than interest-based debt.
Next, I will explain about the difference between conventional bonds and sukuk. Actually, both instruments are used to raise funds in financial market. However, they are different in terms of nature, return mechanism, and Sharia compliance. First of all, we should know the difference in nature of both instruments. Conventional bonds represent the debt obligation or debt-based instrument, where investor will lend the money to issuer and issuer will receive repayment later, which is interest. In contrast, sukuk represent the ownership of an asset or asset-based instrument, which means investor that buy sukuk will own the asset share, such as buildings and projects. Thus, sukuk link to the real economic activities and not just lending money. Besides that, we focus on the return mechanism for both instruments. As for conventional bonds, it provides interest income which are fixed or floating interest, also known as coupon payments, to the investor. However, income from sukuk derive from profit sharing, rental income, or asset performance, since sukuk do not involve interest to avoid riba. Moreover, there is another important difference between both instruments, which is Sharia compliance. For conventional bonds, it is not restricted by Islamic law, which may involve riba, which against and prohibited in Islam. On the other hand, sukuk must strictly follow Sharia principle, which prohibited interest, or known as riba, excessive uncertainty, also known as gharar, and investment in non-halal activities such as gambling. In conclusion, conventional bond mainly focus financial returns without restriction, while sukuk focus on emphasizing risk sharing, ethical investment, and real economic activities. Thus, it makes sukuk more aligned with the goal of Islamic finance and ESG or SRI development.
Assalamualaikum and hi everyone, I'm SYAMIL FITRI. For my section, I will be covering the foundation of sustainable Islamic finance, Maqasid al-Sharia. Basically, this refers to the higher objective of Islamic law. It's not just about the following strict rules. The main goal is to promote public interest or maslahah and prevent harm or mafsadah. To do that, Islamic finance has to protect 5 absolute necessities known as al-duriyat: faith, life, intellect, progeny, and also wealth. So, how does this actually tie with ESG? Well, if Islamic law commands us to protect life and progeny, that naturally creates a direct moral duty to fight climate changes. We simply can't protect future generations if we left them a ruined planet. And when it comes to protecting wealth, it means capital shouldn't be hoarded or used destructively. It needs to be circulated into projects with positive social impacts, which is exactly why instruments like Green Sukuk exist. Ultimately, this gives a quadruple bottom line. Conventional ESG looks at the people, planet, and profit. But Maqasid al-Sharia adds a fourth pillar, spiritual accountability. It shifts sustainability from just being a corporate trend into an actual religious duty. That's all for the core principles. I will now pass the floor to the next presenter.
Moving on to the real-world application, let's look at the actual companies issuing this ESG and SRI sukuk in Malaysia. Starting with our first table, we can see massive investment going into the environmental and infrastructure sectors. First, in the energy and utilities industry, we have Tadau Energy Sdn Bhd. They issued the Tadau Energy Green SRI sukuk worth 250 million ringgit. This was actually a landmark issuance used specifically to finance renewable energy infrastructure and clean power generation. Next, for building and real estate, PNB Merdeka Ventures issued 6 billion ringgit through their Merdeka Asian Green and SRI sukuk. The main purpose here is to fund the development of sustainable, energy efficient green building, specifically the Merdeka 118 Tower. Finally, for this table, in the transportation sector, Malaysia Railing issued a massive 10.21 billion ringgit in SDG sukuk. These funds are to support the constant construction of sustainable public transportation and railway infrastructure across the country. Moving on to the second table, we can see how SRI is actively used to fund social well-being and essential utilities. In the healthcare industry, Sunway Healthcare issued the Sustainable Wakala Bi Al-Istismar sukuk, which means agency for investment sukuk amounting to 400 million ringgit. These funds are used to expand medical facilities and improve the community's overall access to quality healthcare. Next, representing the financial sector, Khazanah National issued the Ihsan SRI sukuk, raising 200 million ringgit across 2 tranches. This is a perfect example for a social impact bond because the capital directly finance programs focus on improving our education system. Lastly, Pengurusan Air Selangor issue 1.5 billion ringgit under their SRI sukuk kelestarian program. This money goes directly into upgrading utility infrastructure to ensure the public has a sustainable and clean water supply. To conclude our group's presentation, this real-world example clearly proved that the Malaysia Islamic capital market successfully channels billions of ringgit into projects that perfectly balance financial growth with environmental and social benefit. That brings us to the end of our presentation. Thank you.